Secret sauce. I'm willing to give you, my secret sauce. Why? Ordinarily, you think, well, if you're a new business person and you're starting a business, you don't want to give up your secrets, right? You want to have that moat. I want all of you to be doing this, right? I want, if this goes out on the internet, anyone that's watching this, the more people doing this, the better for all of us. And as I mentioned, not that I'm altruistic, but it does, win-win-win for the city, the province, and, self-interest.
Thanks everybody for joining. Who's new here? There's a couple of new faces. Okay. All right, great. Thanks for coming out, guys. Yeah, usually it is a little bit of a bigger crowd, but all good. Thanks very much for trekking out today. Still make it worth your while, I'm sure. A couple of things. Let's just go through our housekeeping items. Washrooms are over there if you guys need them. Please support a local business. The friendly business owner is walking up the stairs right now. Thanks, Krishna. Yeah, please help support a local business. They are kind enough to let us use this space for free. The unwritten rule is, people order something to drink or eat, so that way they can continue offering the space up to us for free. Cell phones just keep on silent. Also, we are recording this tonight. If you guys are looking for a copy of this or the slides that get presented, that goes out on our mailing list. So if you just make sure you're on our mailing list so you get the notifications. Okay, our legal disclaimer. So that was my favorite slide. You can read through this, but basically what it says is if you're unsatisfied with what you're hearing tonight, your remedy is to leave. So you can just go if you don't like what you're hearing, but hopefully you do enjoy what you're hearing tonight. A little bit about us. So Volition, we're an investor realty firm. Basically what that means is we help people buy and sell real estate. Oftentimes it is investment real estate, but we do a lot of, I call regular real estate as well. What makes us different is that investor lens that we're applying to any sort of real estate transaction. So, things from financial modeling, where we're working out I was doing some work today. I saw Daniel, doing some work with Daniel earlier today on a very exciting opportunity that we may be going ahead with. That rolling into greater planning and advisory. So oftentimes, real estate is just the end result of a greater goal. You may have another financial planner you're working with. You may have estate planning. You may have multiple corporations, things like that. We work all through that through our planning and advisory. We look at construction and development. That's part of why we're here today. Can we execute on your business plan on this particular lot? Does this area make sense for us to do this kind of work? We help out with that. We like to make all our decisions based on data, as much as we can extract out of the antiquated MLS system. We like to, my background is in computer science, so I'm still a bit of a data nerd, love to have the data. Next thing is community, that's us here. A lot of folks, I think, know each other within the room. We actually have 3 Dans tonight. It's kind of crazy. It's only half the Dans. It's like the requirement if you're getting into real estate investing. But yeah, we have a community, kind of investors helping each other. It is a tough journey if you don't know anybody else doing this, if for the emotional support alone. And lastly, we come from experience. We're all investors ourselves. We all own investment properties, multifamily properties, and majority of it all here in Toronto. If you like what you hear and you'd like to end up working with us, there's basically 2 ways. You can go through advisory, get a bit more of an advanced plan, or if you want a more detailed touch on what you're doing, or you have a more complicated background, you're trying to do something like condominiumization, for example, and you're looking for somebody to work hand in hand with you on that. Or if you have a little bit more of an idea what you already want to do, you can work directly with realty. Let's say you're like, okay, I want to buy a duplex to start with where I live in and rent out the basement, right, to help build equity in the property. Then you'd start working directly with realty. Either way, you hopefully become part of our community, come out to the meetups, and join our online community as well. This is the team. We have some updates here, but it's been absolutely nuts. Well, I'll get into this in the market update, but I've probably done a year's worth of work in the last 2 months. It has been absolutely crazy, the market. So this needs to be updated because unfortunately Sally has left us. She's now found bigger and better things. She's still helping us out, but she's not officially part anymore. And we do have a new admin who's joined us, who will be joining us at our next meetup, which will be a 4+1 tour. And I'll give you some more details at the end of this, at the end of the presentation. So it's been good for us. We've run a bunch of awards. We've been on a bunch of publications and shows and stuff like that. So it's good. Reminder for any clients who are not on the inner circle, we're really bad about this. We keep missing this, but let me know. Let somebody on the team know. We'll make sure you're on there. You can follow us online. If you want to get slides for tonight, just make sure that you're getting our emails. If you found out about this through some sort of email blast, then that same sort of email blast will let you know about the recordings. And also, we are now on YouTube. So you can if you're unable to make it in person to some of these meetups, you can watch them on YouTube. We've also been putting together longer format videos talking about, should I buy an investment condo, right? Spoiler, you should not buy an investment condo. I just tell you why you shouldn't. Okay, let's get into the market.
Before you move on,
Yeah.
is anyone interested in renting a 3-bedroom condo?
Renting, yes, but buying. Cool. Let's go into the market minute. So, what's really interesting about what I'm seeing here in numbers and what we're actually seeing in action amongst our client pool. Usually we're pretty in step, but right now we're seeing a big discrepancy between how active we are and our realtor team is versus what the rest of the market is. And for me, that's a leading indicator because our community is a little bit more sophisticated than your average buyer, right? They're following, you should see these discussions that we have all the time in our inner circle chat, right? Talking about what's happening on a macroeconomic level and how that may be impacting real estate. And in the last, I'd say 3 or 4 weeks, there's been a lot more engagement from people buying properties, investment properties, because they're cash flowing right now, and those who are planning to take action shortly. And it's a stark difference from what we saw, let's say, kind of late spring, early summer. It was very quiet then. Today alone, I had 5 conversations, 5 meetings with people about potential properties, about potential investments. So I do think we're starting to hit that change in buyer sentiment where interest rates are starting to come down enough that they're starting to look at taking action. That's not reflected here though. Like sales volumes in September, still meh. And I'd say October, I do expect October to be a bit better than September. It feels like it, at least from our little piece of the world. But yeah, that's what we're seeing right now. Average home sale price is starting to creep up as well. I think this is also interesting. Like properties are continuing to sell. It's not as dead as I think as some of the headlines would make it. Good property, good quality product is moving. We are seeing multiple offers again on good quality product. And when I mean good, like not like I love my place, but it's really a 6.5 out of 10. These are like actually nicely renovated, completely turnkey properties, but on both the multifamily and the single family side. Condos not included. Condos are its own very sad world right now, unfortunately. So just single family homes. New listings are way up though, because what we saw and this is part and parcel with the seasonality of the market. We usually see a spike in spring, we see a spike in fall. It's a pretty big spike we saw this time, but a lot of it is garbage. Like there's a lot of crappy properties that people wanted to get rid of, and in a typical hot Toronto market could probably get rid of them, but they're just sitting, right? And I'm seeing that a lot with our single family buyers. They have a pick and choose, but on the nice places, there's a battle on those nice places. So in order to sell your property right now, if that's something you're interested in doing, you really need to make it a 10 out of 10, like now more than ever. And if you do, there are absolutely buyers for it. But because there's a lot of less quality product on the market that's come on the market in September, that's affected the sales to new listing ratio, which is lower than I think. If there was a way for me to cut up this data where I could take out mediocre properties, I think you would actually see this quite high. I think you would start to see this turnaround. But because this includes a lot of 6.5 out of 10 properties, those are just sitting, right? You got a mediocre townhouse from the 80s, never been renovated, up in Vaughan. Nobody's buying that right now, right? Similarly, we know somebody who's tried to sell a townhouse up in Markham. Yeah, Unionville area. Took them forever, right? And that was it was okay. It was like a 7 out of 10 property, right? Those are not moving. You're not going to see the multiple offers in those properties. But we always keep an eye on the sales to new listing ratio because this is as close as we get to a future indicator of where things might go, because this is essentially our absorption rate, right? This is what's selling within 30 days, comes on the market, sells within 30 days. If it does, then starts to move this indicator up, but it is still pretty low. This is against average home price here, and so we're kind of down in that -7 to 8% range right now. When we start to see that pull up, the market will be hot. If you see the pricing trend follows kind of closely to the sales to new listing ratio trend. That's why I like this data. It's not a huge leading indicator. You got maybe, I don't know, 2 months between the what we see in the sales to new listing to price, but it is something.
So we still have room to go down, it looks like.
There's always room to go down.
But have we seen multiple offers on good products?
Yeah, that's the thing. We are still good stuff is absolutely moving, and that I think is indicative of the buyer demand. They're just not willing right now to buy crappy stuff, right? When the market's hot, buyers will buy whatever they can get their hands on because they have no choice. But right now, because there is a bunch of inventory, they have a choice, right? So they're going to hold out for the better properties. But those that are good, we've seen places with 6, 10 offers, bully offers coming in, because just a single family client was looking at semi-detached Steeles and Young, right? And nicely renovated semi-detached, had a bully offer 3 days before the offer night, and they still had 10 offers on that property after the bully offer. It's actually a very hot market if you've got the right stuff right now. And I think it's sold for 1.4 something, which if you know the southwest corner of Steeles and Young, it's okay. It's not a super nice neighborhood. Certainly a 1.4 semi is a pretty high price for that area. Okay, let's dive into our data. So what we like to do is then take the macro picture of what we're seeing within Toronto, drill it down to the neighborhoods, because we know, real estate's local, kind of hyper-local. So important for us to know what's really going on in the individual areas. So this is our data that we have here. You can see the downtown core is kind of flat, maybe a little bit down in terms of like-for-like sales. So basically what we're tracking is, Dan's maybe I should grab the zoomed in version for all our aging eyes. But there is a slight downward on, this is 3-bedroom, single family detached homes, right? And my hypothesis behind this, because I'm seeing such a duality in the market, right? I'm seeing multiple offers and 10 offers and competitions and bully. And at the same time, I'm seeing prices going down. This doesn't quite add up. What I think some of this are people that are selling those crappy properties at low prices, because some of them have to exit, right? Some people are still caught with variable rate mortgages. Even though it's come down a full percent, their mortgage payments are still considerably higher than they would have been at their lowest point, right? So there are probably some folks who have to exit. And, there are still people who are in estate sales who, they have to sell those homes. They can't hold empty homes, right? So you're seeing some of this pushing down pricing, those not so good properties. That's what I think. Unfortunately, the data doesn't go that deep. Yeah.
Is that legend wrong? Yeah, I'm trying to, what is
The legend is wrong.
That's what I was trying to figure out.
Oh yeah, that got, you are right. The legend got messed up. I'm sorry, guys. So basically, what the dotted lines are, these are the TREB averages. So this is your TREB this is a TREB overall GTA, the purple line, and the blue line is your downtown core, right? So this is the average. This is Willowdale. This is East York. Yeah, so kind of East York, Little Italy, Willowdale, right? Yeah. Light blue, I don't remember. These are all, so if you're familiar with our where we look at investing, we don't really look at investing in Willowdale, but most of it is EO1, EO2, so like the East York core, and then we look at Dovercourt, Wallace Emerson, Little Italy, Little Portugal. Those are all these neighborhoods that are mapped on here. Yeah, I don't know why it messed up, but thanks for the catch. What we'll do is when we send this out later, we'll update the legend so you guys know which neighborhoods they are. But you'll have to just trust me then. That's how every scam starts, right? But yeah, so these are all our downtown core neighborhoods that we're looking at. And then oh, this is condos. It's the same neighborhoods again. At the end of the day, we're still looking at this downward trend that we're not seeing a bottoming of, unfortunately. Yeah, it's
That big piece Riverdale?
this, I think, the orange is typically Willowdale, actually. So this would be the Young Street corridor between like Shepherd and Finch, all those condos. Yeah, and then this is the outskirts. So typically, what this represents is Markham, Stouffville. We have on here. I think we have Aurora as one of these. Usually, we see a bit of not a divergence, but the downtown will move first before we see the uptown move. But right now, they're kind of in line. So we're not seeing one move before the other. The reason we care about this is it sometimes provides us, again, with some early information. Because the downtown tends to react first in terms of recovery. It's generally more desirable to live close to infrastructure than it is to live far away from it. So when we do see recovery in pricing, we tend to see it downtown first, so we look at that. It's also where a lot of our investment properties are, so we keep an eye on that first. And then those for us maybe have personal residences and things like that. Or if, maybe you got some bad advice and bought a duplex in Richmond Hill, then you can keep an eye on this. Cool. Let's hand it over to Wilson. He is going to walk us through some interesting condo stuff.
Condo rent declines from peak. So rates are coming down. Sales volume looks like it's turning a corner, but we need to concentrate on what rent looks like, right? So the picture in the rental market is declining from the peak. So the cornerstone of the rental market, one-bedroom condos, they're losing about 6% from the peak. And 3 beds are even worse. I'm sorry, Karen and Dan, 11.39% from the peak, right? So as real estate investors, it is obviously very important to kind of keep up to date with the rental market. And I mean, there's a lot of factors at play. It could be, net new immigration that's coming into the city, big towers that are being completed that has more supply, right? You have a lot more competition. But with what Ming said before, a good product that sells, a rental in the rental market, good product gets rented, right? Flo and I were chatting about one of her places, and in a premium desirable location with a premium unit, you will attract a premium tenant, right? So we just wanted to put this chart up here and let you guys know what the rental market is looking like. So we'll see where it goes, but it's down from the peak right now. So yeah.
Any questions about this data?
Where is that?
Whereabouts is this?
This is in the peak, the downtown core. Yeah.
What's that tracking? Or where's the data coming
Where's the data coming from? I actually don't know. I'll find out for you and I'll send it to you.
It's probably MLS data. Like all the data ends up being MLS minus CMHC data, which is usually much further lagging.
Yeah.
So a couple of things to touch on that Wilson mentioned. So when we're talking about a lot, because a lot of us here have multifamily, triplexes and things like that, there is some impact to that market, right? Like when you have a ton of condo supply, there is some impact to, the rental pricing and the rentability of the multifamilies that we own. But there's a couple of things that we have as an advantage, and as if you're looking at buying, to keep in mind. The big one is space, right? Oftentimes when we're looking at these multifamily converted properties, the floor plates are considerably bigger than a condo, right? We're not cramming 3 bedrooms into 800 square feet, right? We're not doing that. At least I hope none of you are doing that. We're often looking at floor plates that are, between 800 and 1,000 square feet, and we're putting 2 bedrooms in there. So it's very comfortable 2 bedrooms, right? So that's always an advantage for us. And access to that and being able to design in working spaces. A lot of our tenants are working from home these days. And when you have enough of the square footage, you can design your floor plate in a way that you have, good work from home spaces. It's tougher to do that in some of these newer condos. Like they're usually quite tight. 1,000 square foot 2-bedroom place is a very expensive condo these days, and it's not your average 2-bedroom condo, right? You have to get to a lot older units to find that kind of space. So space is one. Access to the outdoors is the other one. Balconies, front porches if you're on the main level, backyards, things like that. These are things that it's very difficult for a condo to provide in a practical way, right? If you're up high on the 50th floor and you have a balcony out there, it's so windy most of the time that it's unusable, right? And oftentimes the balconies are very small because every square foot in that condo matters. So we can put in larger decks and outdoor space where it's harder for a condo to provide that. So these are some of the reasons that the multifamily rentals are continuing to rent. I'm not saying we're not impacted at all by the glut of inventory right now, but it's not as bad as it might be if we were offering the exact same product. Do you guys want to go right into the presentation? I think we should, yeah. Okay, let's do that. Okay, so I will welcome to the stage Mr. Daniel. We call him Dan Z because I'm always scared to screw up the pronunciation of his last name, but it's Zimbarov, right?
It's good. Yep.
That's close enough. He's not going to correct me in front of everybody. I'll let you read this here, but I think one of the most important things to take away from this is that Dan is attempting to solve, and I think has, in some sense, cracked the nut on condominiumization here in the city. I think it has been something that many of us have wanted to try to potentially tackle as an exit for some of the renovations we're doing, or maybe as a complete business plan unto itself. It is, we're going to talk, I think, today about a lot of the challenges, but there have been few that have been willing to go through this arduous journey. But Dan is certainly going through this. So let's put our hands together. Welcome Dan to the stage. I'll let you sit here, sir.
Thanks, Ming.
Thank you.
Alrighty. Just page down.
Yeah, clicker's here. You can.
All right, great. Thank you, Ming. Thank you for the Volition team. It's a little strange because I'm usually on the other side of the microphone here watching. I've been involved with Volition now. It's got to be over 2 years, huh?
Yeah, it's been.
I came. So I'm from the States, American. Moved here about 5 years ago. Quick background: lawyer down there. Did real estate law for about 20 years, and was kind of a weekend warrior. I wouldn't even call myself a developer necessarily. Did a lot of flips, had a partner down there in a few different states. Came up here and was kind of shutting down my law practice and thought, well, I want to devote full time to real estate. So I started looking at, well, I'll do the flips, right? That's pretty simple. Well, it didn't take too long before I figured out that really doesn't work in Toronto. Pretty mature market, and this was, in 2021, a hot market still, 35 offers. Kind of banging my head against the wall after a few times of offers and getting shut down. So then got hooked up with Volition and your guys' sweet spot of, conversion to the triplexes. That's when you guys were really starting to ramp that up. Okay, that sounds good. So I'll do flips of, triplexes, take the single family. And then even that was, that's not the best model either because once again, pretty mature market, penciling out. Works great as a burr, right? You can hold on to it, absolutely. But I was trying to come up with a repeatable business, right? Not just on the investment side. And that's where, by the way, kind of a plug for Matt on the consulting side. I was trying to figure out, what business can I do real estate? And it took me some time. It had been well over a year. It was mainly a process of elimination. And then one morning I woke up and I thought, because I'd done a lot of condo work in the States. I was an attorney that represented HOA and condo associations and then individual homeowners. And one day I woke up, I'm like, why aren't there walk-up condos here in Toronto? Walk-up condo being, the small, could be a duplex, triplex, quad, something probably smaller than 6. We'll talk about missing middle here in a moment. So I think I asked Matt, I asked you, because they're expensive and no one really does it. It's difficult to do and the city doesn't really embrace them. So I started asking questions and the answers I was getting was, yeah, I get that, but I think maybe we can work around that and I think we can work around this. And I was thinking that I had this great idea, Dan Zimbrov, wow, walk-up condos. It's because everywhere I'd lived, it worked, right? I mean, look at major North American cities, especially in the US, and they all have, Boston, the brownstones, and LA, and even in Montreal, Vancouver, right? Walk-up. I use the term walk-up condo. It's mostly standardized, but not necessarily, especially here, because the industry's still kind of getting used to it. So whether it's a multiplex condo or a multi-residential condo or a boutique condo, it's all essentially the same. We'll talk about multiplex in a moment, or missing middle. So I had some assumptions. I thought, well, no, I think there's a solution to that, a solution to that. So I met with the city, had a couple of meetings with the planners, and essentially they confirmed that my assumptions were correct for the most part. So I thought, okay, I think there's a viable business model, and worked through Matt and a lot of Ming's help as well. So I started that process. We obtained property earlier this year. So I think you'd mentioned that I cracked the nut.
Cracking?
Cracking the nut, yes. Cracking the nut. However, I did find an architect, Evan Saskin from Blue Line Building, that has done it here in Toronto. I think he's probably done about 10 of these condos. Now, he was doing it a few years ago before the as of rights, and so he was the trendsetter there and having to bully his way through. So he's proven that it is a workable model. Yep. So I'm relying a lot on his experience, coupled with kind of on background knowledge. So once again, I'm not an architect, I'm not a designer, I'm not even a lawyer anymore. I'm a recovering attorney from the U.S. But I do, once again, I think I've got pretty extensive experience. In addition to representing homeowner associations, I also sued a lot of developers. So through 10 years of construction defect, of deposing engineers and architects and planners and folks, a little bit of experience there. So that's what I'm doing now, is I'm doing some consulting for people like myself and maybe people like you that don't have the experience in condos that want to start there, as well as putting some deals together for myself and others. So that's a quick background on how I got to where I am. Have some formal remarks, if you will. Please ask questions as we go along. I'm really hoping, and I think at the end of the formal presentation, we'll probably have a pretty good conversation, discussion, at least I hope so, and really want to use the experience here in the room. Because once again, I'm one of you folks, right? I've been back there, and I think that we can get some good discussions. And once again, I try to tailor this to this audience. Okay, so executive summary. What are we talking about for this walk-up condo? Here's an example. through the picture. You're purchasing a single family lot. Most likely this works if you're infill, right, demolishing. Now, can you do a conversion? Yeah, in fact, I was meeting today with a client that's what she's looking at, possibly converting, and we can talk about that, the pros and cons and difficulties there. But if you're talking about a sustainable, repeatable model, more likely in the Toronto core, we're looking at demo and infill, sell, repeat. So where's the money multipliers, developers, right? What's the first thing you want to do? Well, here you're increasing square footage. So are you going to go to committee on these? Absolutely, right? You want to increase that GFA. And you're selling probably 3 to 5 homes on what previous one. So as a developer, you want to buy something and you want to sell more of something, right? So this is really the leverage here, is you're turning a single family lot into 3, 4, 5 homes. There's some good missing middle symposiums and seminars. Keep your ears and eyes open for those, various groups. I went to one last year. A lot of good information. A lot of people like ourselves, smaller developers getting information. There are different ones. There's the Missing Middle Summit. Yeah, it was right around the same time in May. There was a one-day seminar, and then there was a weekend seminar pretty much the same week, or at least the same month in May. I went to the one-day one, and they packed in a lot of information, and it was relatively inexpensive. The weekend one I didn't go to. It was a little bit more expensive, more of a commitment. That was just 2 examples. But Missing Middle is getting a lot of attention now, as it should in Toronto, right? Because this is the solution. The title of the presentation was Condominiumization, a solution to the missing middle, but there are other solutions as well. So why there's so few walk-up condos in Toronto? Well, first and foremost has been the municipal policy, right, that disfavored multiplex projects in general, not just condos, but multiplex. And I also have slides here. I'm going to address each of these in the next series of slides. Economics favored building apartments over and tower condos, the limitless rental demand. There wasn't really a need to try to break through the difficulties, right? Because you're making money on the rentals and the apartments and the triplexes, right? Well, we don't need the condos when it's easier to make money on the apartment side than it is on the condo side. Large regulatory red tape. Industry bias against walk-up condos. Too expensive. I heard this from lawyers. Well, it costs the same to prepare the docs for a 40-story condo as it is a 4-unit condo. Yeah, but not really. I mean, I used to prepare those documents, and for a 40-story condo, your declaration is going to be this thick. For the project that I want to develop, it's this thick. Don't tell me it costs the same to prepare that as it does this. Right? Just one example. Historically, entry-level home buyers could buy single-family homes detached in the core of Toronto. Right? They didn't need to go to condos. Condos were usually, in comparison to single-family homes, either people that wanted to downsize, right? They're maybe the older generation that wanted to downsize, or that true entry level that really was looking at the most affordable. Right? So, how do we crack this nut? The municipal policy. Well, we all know political change and the bylaw changes and the as of right. Also eliminated or deferred the DCs, the development charges, right? For up to you get the exemption for 4 and the deferral for the 5th. So that was huge. Economics pushed apartments over condominiums. Although rental demand obviously remains high to this day, new home demand also remains historically high. They're not building and they're not making more land. Yeah, same.
Does the deferral still apply when you're condominiumizing it?
It does, gray area, right? My argument is because it's one project, it's one condominium, and this I'm relying more on not personal experience, but secondhand, is yes, they've been able to do that. However, I've also heard that kind of depends on the planner and what you have to do to jump through that, because it's not purpose-built or rental, right? So I think the stronger argument is it is because it's one project, but it's not cut and dried, to answer your question.
People be successful doing that?
Yes. Yep.
I'd be interested, how would they get you, right? Once you've submitted permits and your DCs are exempt on the 4.
So you sign a DC deferral agreement. I'm doing that literally right now.
On a laneway?
Yes.
Yes. So,
Garden suite.
okay. So,
Is that what we're talking about?
so there's deferral and exemption. So the 4 is an exemption, the laneway is a deferral. So if they exempt you, then there's nothing on your docs to charge you. There's no bill after you get your permits. I guess they could come back and throw it on your property taxes, for example, right? The deferral, I can see them coming back to you on.
I think that's what he's talking about, right? Yeah, the
Okay.
interpretation.
So maybe just the laneway suite, which is deferred.
I think you should still be exempt for the first 4.
The first 4 should
The
be
first 1,
exempt.
2, 3, 4
Yeah.
are exempt.
Yeah. So there should be, I would think at worst case, 4 out of the 5
Yes.
taken care of.
I
Yeah.
think so.
Yeah.
And is that what you would
Yeah.
agree, or you think that you still potentially could have the
I think if you got the wrong planner on the wrong day, you would have a challenge
on just the 5th?
on just the 5th. Yeah. The first 4, I think that's hands down, not an issue.
Well, I was speaking to a planner a week ago, and if you do all 5 at once, you're hitting development charges on all 5. They won't give you the first 4 for free, which is
That's what
such
your
a
examiner is.
stupid way of doing it.
Yeah.
But
I think that's one of the themes. We haven't touched on it yet, but we're hearing it now on condominiumization in Toronto for walk-ups. It is so subjective, right? And it's because there's just so few, and a lot of it is going to depend on who you get. And then hopefully your first project goes well, and then you can always refer back, even if you get a different planner. Well, they said, and in fact, we built this. In fact, that I know, once again, secondhand, but directly that type of example has happened. So, now, the economics push apartments over condos with large HOA fees. If you're looking at tower condos, they could be $1,200, $1,400, $1,000. Doesn't make sense, right? To if you're trying to sell a condo, yet you've got those big HOA fees. Well, if you design and build the condo in the way that at least I believe, then those HOA fees are essentially nominal. I mean, you can make them less than $100 a month. So the HOA fees then are not an issue, right? So another reason that's helping in the condominiums. The large regulatory red tape, you've got less red tape and then no third-party appeal. So it's the same if you're developing the triplexes and the rentals there. Industry bias against walk-up condos. If you're building, you touched upon this with the rentals, right? The difference between tower condo just a few minutes ago, where if you got a backyard, right, you're not living up in the clouds in the sky, if you've got parking spaces, if you have separate entrances. One of the other themes, I'm not sure I've got a slide for it, but when I look at, if I'm developing this condo project, a walk-up condo, my end consumer, my buyer, I'm not competing against the condo. I'm competing against a single-family home. So I'm going to, in everything I do in my design, I'm going to look at it from the perspective of a single-family home buyer. I'm providing them an alternative. Yes, is there a shared wall or shared walls? Are there potentially, is there some common area? Yep. But we're trying to really distance ourselves from the design of a tower condo and the philosophy of the tower condo.
Yep.
So some of these biases, condo, raise your hand if you think condominium is a bad word, right? A lot of people in the real estate industry, like, oh, condo. No, we're looking at single-family home, right? And the neighborhoods that we're looking at and the type of design, it's really geared towards the single-family home. And we'll talk a little bit more about when I'm meaning specifically on the design. And once again, the bias does not exist in so many other North American cities, right? I'm quite confident it might take 5 years. I don't think it's going to take 10 years, but there's going to be prevalent amount of these walk-up condos in Toronto. Why? Because it makes sense, makes dollars and cents. And there's a slide coming up. Well, I think it's the next one. Yeah. So it helps fill the missing middle. And if you look at the 3 bullets, it really is a win-win-win. These walk-up condos. Provides more market affordable or market attainable housing, right? The entry level or the first time buyer. It does add rental stock because ordinarily a condominium, you guys close your ears, is not the best investment, right? If you're trying to rent it, because not only do you have the mortgage, but you got to pay the high HOA fees. Well, if your HOA fees are $70 a month, all of a sudden that investment makes sense, as a rental. And third, it just obtains the maximum best use of property. It adds density, which is what the mandate in the city and the province is now. So it really is, I think, a win-win-win. And like I say, don't take it from me, Dan Zimberoff. Look at all these other major North American cities where it works. So I really debated whether I wanted to put this slide in because it's so just generic. And of course, there's a lot of variables, but just to get a sense, right? You're looking at a lot here of the core. We're not looking at prime, downtown, but you're looking at maybe Eglinton area or South Eglinton. Pick up property maybe at just over $1 million. If you're looking at a 3+1, once again, a lot of disclaimer caveat here, but just to give a general sense of the condominium. Now, there's an anecdote where Evan was working on a project a couple years ago. In fact, there was a presentation he gave that's online where he's going through the appraisal process and trying to remember, I think it was a 3+1, could have been 4+1, and it was before it got officially registered as a condominium, it got appraised, and I want to say the number was like 3.5 million, and then right after it got condominiumized, it was like 5.1 million, right? So that's where you're looking at, the return. And once again, disclaimer, caveat, but just kind of give you a sense of the economics we're talking about. Of course, it depends on lot size and the configuration and the neighborhood, but just kind of a general typical project. Now, secret sauce. I'm willing to give you, my secret sauce. Why? Ordinarily, you think, well, if you're a new business person and you're starting a business, you don't want to give up your secrets, right? You want to have that moat. I want all of you to be doing this, right? I want, if this goes out on the internet, anyone that's watching this, the more people doing this, the better for all of us. And as I mentioned, not that I'm altruistic, but it does, win-win-win for the city, the province, and, self-interest. Because right now, there's just a dearth of comps. There's a dearth of properties out there. One of the roadblocks, and we'll have it up here, at least the headwinds, is the industry. I mentioned it. That's traditionally been, stigma of condos, especially walk-up condos. As I said, I think in 5 years it's not going to be an issue, but to get there, we need more inventory out there. So that's why I'm willing to, I'm full transparency. Here's what I think, and this is why I think is the best model. So keeping low HOA fees and reserves down. Minimal common areas. So what does that mean? Think of tower condo. You've got elevators, you got lobbies, you got a rec room, you might have a pool, you got a garage, a lot of common areas, a lot of money. Well, once again, we're not designing and we're not selling to the condo owner. We're designing and selling to the single family homeowner. Make as much of the property separate interest, the home itself, right? That includes windows, that includes roof, that includes a yard, right? So what do? You design it to maximize the separate interest, minimize common areas. It does two things. It keeps the HOA fees down, and it also makes it more of, this is my home. I don't have to share in these decisions on when to replace the windows and when to replace the roof and when to do landscaping. No, that's up to me because I own this little home. It happens to be attached to it, but we're all used to setting my detached homes in Toronto anyway. So keeping the common areas, the fees down. I think, and this is just once again personal preference, and certainly there's arguments the other way, but in trying to cater to that single family homeowner, it's separate entrances. And one of the big issues I think from condos versus apartments is noise, and that's usually floors. I think you can get away with it absolutely if you have apartments because people are used to that, right? If it's an apartment and I'm spending X dollars per month, I'm used to it. But if I'm going to shell out $1 million or $1+ million, I don't want to hear my neighbor walking, all the time. So what does that mean? It means more of a townhouse design. And here in Toronto, if you're looking at, the core, you've got fairly narrow lots, right? 25 by 120 is a great one, which means your triplex is sideways, meaning you have side entrances, right? Now, what's the disadvantage is you have a home from basement all the way to the third floor, and it's your home. You don't have noise above you. Sure, there's noise to the side potentially, but that's lessened usually than the up and down. What's the downside to that? That middle unit, right? So first unit has front yard, back unit has rear yard, and if you've got a laneway or garden suite, has a yard. So that middle unit doesn't have a yard and has less windows. So the value is going to be less. There's some things you can do to try to mitigate that. Have a nice balcony. If you design it with a sunroof that can go all the way down and get light. So there's some things you can do to mitigate that. But yes, that's admitted. There's no perfect world here, but I think when you look at the other design advantages, they outweigh that. But that's just my personal opinion.
I'd add some of the nice things about the townhouse design as well is it simplifies fire separation requirements. Because a lot of times if you have stack units, you have to create fire separation vertically, right? Fire goes up. All you need is a block wall now when you're separating them horizontally. So it makes fire separation easier and takes out the complexities that are often involved in having to punch through fire separation for HVAC or punch through it for water service or whatever it is. They're all completely separated out.
Yeah, good point. Plus, people are also used to those as well. They're used to townhomes, so it's not this strange design as well.
Yeah.
Minimize legal fees. Yeah.
Yeah, just how do you design any of these yet as townhomes with the entrances off the sides?
Yeah, well, Evan has done, like I said, about 10 of them. That's his classic design, and the one that we're doing now and a potential second one, yes, it's that way.
So I think I've seen Evan's presentation. I think what he does is he still has to have the front door facing the street, so it's sort of like a offset design rather than sort of facing the side. Because I know, talking to one of the planners that I've been working with, he said you can't really have a front entrance facing the side of the house like another house.
I think you're looking at 22 feet would be the minimum on the side townhome, if you will. Yeah. The other thing is, a streamlined dispute resolution methodology. As I mentioned, I was an attorney for many years representing HOAs and then individual homeowners. And I represented everything from the 40-story condo to the 2-unit. The most difficult clients were the 2, 3, and 4-unit condos when you had somebody, because when you get into a dispute, the owners, how do they resolve that? Especially if it's 2 units, everyone's got 50-50 vote, right? 4 units, there's 2 and 2. There's things you can do in the documents themselves to help that process. Ultimately, is that your responsibility as a developer to make sure that everyone lives harmoniously? Not necessarily, but as I said, there's things that you can do to help them in that process. And similarly, as I mentioned, at least my philosophy, Evan's philosophy, is if you're maximizing the separate interest, the home, you can still put covenants and restrictions in the governing documents that require the owners to replace windows at certain times or siding or roof. So you don't have that patch quilt or someone that says, no, I'm not, 10 years down the road, I'm not going to upkeep my side. Because ultimately that does affect, the neighbor when it's still part of the same building. So there's things that you can insert into those governing documents that require proper maintenance and upkeep.
It makes sense too, you don't want to do it wrong and these condos start to get a bad name.
Exactly.
Right, from the general public after 5-10 years from now.
Exactly. Yep. I think we're all, it's part of this group, Volition, responsible developers, and you want to look at the big picture and long term, not just the short term. Okay. Alternate to Burr. I'm part of the WhatsApp group, and I do not want to be a landlord. I don't. I see the horror stories. I was a landlord, in the States for a while, and you're not going to have any tenant hassles. You're not going to have to worry about LTB, and you're looking at short-term investment, and you're looking probably 24 to 36 or 30 months, 36. You're not looking at a 5, 10, 15 year. Now, obviously, I don't mean to badmouth Burrs. They're great when they work, and if you've got a long-term business model and plan, absolutely. But some of the downsides to Burr necessarily, this is a potential substitute for you.
And we have good tenants.
Of course you do. Okay, full disclosure, right? It's not all just happy sailing. What are some of the challenges? HST, big one, right? If you're a tower condo, you're selling the condo, it's easier for those developers to kind of bake in HST when you look at, the big picture and all the units they're selling. When you're selling 3 or 4 units, it's out there. You can't kind of get around it. And as of now, you've got, I've heard, potentially there may be some waivers or some issues down the road, depends on the next election. But as of today and recently, you're gonna have to pay HST, or the buyer is gonna have to pay HST, and you gotta figure out that. Terry warranty, used to be able to get around that different ways maybe, and now they're clamping down, especially the mortgagees, maybe requiring that. So that's not insurmountable, but it's just another issue if you're going to be developing these. We talked about the development charges. And then, as I said, educating the marketplace. Everything from appraisers to real estate agents and brokers, to buyers themselves. It's going to take some time before this marketplace fully embraces and accepts them. And until that time, there's going to be probably there will be some up and downs on a project. Unfortunately, we're really dependent on the few comps that there are. And, some of the product out there has been a little bit questionable. So that's the challenges. But, risk reward, right? If it were easy, everyone would be doing it. That's the end of my prepared remarks, if you will. Happy to answer questions. You want to get in discussion, maybe compare, the BRRRR model to the condo model. Happy to open it up. Yeah.
Were you pre-selling?
I'm sorry?
Were you pre-selling?
No. I'm not. I don't recommend it for a couple of reasons. One is there's just more regulatory hassles, which by themselves, okay. But number two, and that really goes back to educating the marketplace, it's one thing to sell a vision and an idea to a potential buyer when they've got a tower or condo, they're familiar with what a tower condo is, they can maybe go into the showroom, even if it's not built yet, it's another thing if you're trying to sell a individual walk-up condo unit. Especially, so much of this I think is neighborhood centric and design as well. There's not cookie cutter of these. And I think that a lot of people, it's an impulse buy, it's an emotional buy. Once again, they see themselves in the condo. I think it's going to take some time before a buyer really sees themselves in a walk-up condo. Just my personal opinion. Is it possible? Absolutely. Yeah.
It's kind of a follow. I have 2 questions, but kind of a follow. What are you doing for marketing? How are you promoting these walk-up condos?
How do you? I'm sorry.
How are you promoting them? How are you signing them? Is it just MLS or
Yeah, MLS, and then the websites, and the good thing with like Evan, he's got a good track. You look on his website, and you've got these beautiful projects. Yeah, I mean it has been done, right? We're not the first to market. Yeah, and as I mentioned a couple times, because other cities have done this, it's not like this unique idea that oh my gosh, it's a new Tesla and no one has driven an electric car before. Other cities have done it. There's going to be people familiar with it. They just like, oh, I didn't know you did that in Toronto. Oh, you do? Yeah, I guess it makes sense.
Yeah. There's one project just north Danforth that was a condominiumization project as well. It ended up selling all 4 of the units there. It took a little bit of time, and it was also during a very slow part of the market. I'm a bit surprised it actually ended up selling. Yeah, Mortimer.
Yeah.
did it get like press though? Like was it in the media?
It got some media. Yeah, I mean, because it's not, but like I can tell you, like looking at their showings actually booked, it was very low still, right? It was a tough time to sell, but they did get it all sold through, and faster than I thought they would too. It only took a couple of months, which, was actually pretty good. So.
My second question was, I guess, how does the building cost for like that town hall type build versus like a stack option? Is it similar or is it different? Is it more expensive?
Yeah, I haven't done the comparison. If we're talking about new construction, I can't imagine the costs are going to be materially different. You're still looking at similar sizes, materials, right?
I would imagine a stacked to be more expensive on the build, but then you're able to recover because you're getting more density, right? So, whereas Dan's properties are very nice units, higher end units. If you cut them in half, make everything stacked, you're probably able to sell like a 1-bedroom condo or 2-bedroom condo equivalent. So there may be more money to be made there, but then I think you introduce all sorts of other challenges, like the like how do you route the staircases? Now you've got additional fire separation between units. You're getting past the DC exemptions, I'm sure, a number of units.
The psychology too, now you are comparing yourself to a condo.
Exactly. Now you're a direct condo comparison.
Without a gym, without, right?
Yeah.
And kind of back to your question about marketing in general, yeah, you're still, as I said, the philosophy is trying to go for the single family homeowner versus the condo, but there's still some of the amenities of the condo that you want to sell. Right outside your door is, the
Key to a different profile.
yeah.
Yeah.
Buyers.
Yeah.
Not everybody wants a pool or a gym. They want to be close to a good neighborhood with schools and stuff.
Yep, just walk out your door and you're right there. You've got a parking spot. You got a little bit of a yard. Yeah. Interesting though, your comment about like 1-bedrooms. It's going to be interesting in my mind to see how this market evolves on like 1-bedrooms, right? Because as a developer of tower condos, they want to smash as many unit or bedrooms, single family, right? Because it works economically for them.
Yes.
Conceivably it could here too, but I just don't know. I think we have enough of a hurdle right now just kind of getting these sold in more of the single family home than an individual. But yeah, I'm sure in 10 years we'll have a bunch of 1-bedrooms too, or maybe less.
Yeah. Cool. There's I saw more questions at the back.
Yeah, I have two questions. First one was more, it sounds like the end user market is definitely going to yield better returns, but can you see this model moving into more investor-driven numbers?
It's investor driven. One thing I didn't talk about is the risk mitigation. So one of the other advantages of this model is if you're acquiring and you're building and you're going for the condo, all along I'm going to flip it, and there's another COVID or there's another something. Really easy to turn these into rentals, right? We know, even there's a zombie apocalypse, we know for sure that there's a demand for rentals, and you're probably going to get a positive cash flow if you look at a brand new condo and what the numbers. So refinance it, pull some cash out, and rent them for a year or 2 or 3, and then sell. Conversely, or similarly, you build it as, let's say, a 4-plex. Maybe you want to keep 1 unit as a rental, or 2 units. You got just a myriad of options for that. I don't know what I haven't done the pro forma to say, well, is an investor going to buy the whole thing, as rentals? I don't know. As I mentioned, I think probably one-offs, depending on the neighborhood and the particular units, but you have that option.
And then the second question was more about when you hit the 4-plex number, how are you dealing with the accessibility requirements?
The which
The
requirement?
accessibility requirements for multifamily, are you designating 1 unit to be satisfying that quota, or?
I don't.
In a certain building.
Yeah,
He's only at 3.
he's only at quota.
Yeah, it's a 3+.
That's kind of threshold, right? Like
Yeah.
once you have a project of that scale, then suddenly you're being asked to deliver sizably larger units.
Right. And that's why I said I think you'll see some of these larger entities building these 6, 10, 12 unit condos. They're going to deal with those issues. Maybe that's somewhere down the line for me, but right now I'm focusing on just the single lot and probably the 3+1. It's also, when you look at the scalability, it doesn't mean that a 3+1 4 units you're going to make twice as much as a duplex. The numbers that I was looking at in the size and the price points, 3+1 seem to be the sweet spot. But there may be some, and there likely are some projects where a duplex could work, or 4+1 and such. That's some of the variability and some of the opportunities here is really tailor it to the particular neighborhood or lot.
Why did you do 3 instead of 4? Like
On-
3 plus 1 instead of 4 plus 1?
Yeah, primarily on the size of the lot.
Oh, okay.
Because I still, just my own personal business model, if you will, I want to stay close enough to the core, and so the lot size is right restricted. If I want to go further north of Eglinton, you got larger lots, but then I'm just not sure that that's going to work with a condo.
So if you had like another 20 or 30 feet, you would have done 4?
Yeah,
Yeah, if we could find those in the right areas.
yeah.
Yeah. So the challenge, like the part of the risk behind this was like, you know, what are the right neighborhoods that we could execute this business model against, right?
To start, right?
To start.
Once again, I've said this a few times. I think in 5 years or 10 years, they're going to be all over. But for now, I don't want to be the first to market. I want to be early to market, but I don't want to be the first one to market.
Yeah. So we try to do it in areas that are a little bit more established. There's already some regular condo development, some like low-rise condo stuff, things that are kind of similar that we could use as potential comps in the business model, right?
Daniel, based on your experience, what are the neighborhoods you kind of recommend in terms of in Toronto?
Yeah, I've focused on the west side versus east side, more of just kind of a personal, I live on the west side. I think, and this is just purely 100% just my opinion, my gut. I don't have data to follow up. And Mortimer was closer, the east side. My gut is just telling me more west side than east side, but I think there's certainly opportunities there. I mean, Mortimer was one.
I can tell you where it doesn't work. So it won't work when we did the modeling, it doesn't work in our A neighborhoods. So like if you've seen our heat map or investment heat map, so like the Little Italies, the prime Dovercourt, Wallace Emerson, Annex, land acquisition is too expensive there.
Yeah.
And you know, you're getting in at like 1.4, 1.5 just for land, lots too small. So it doesn't work in those, like, which are great for conversions, or burrs or buy and holds or whatever it happens to be. It doesn't work for redevelopment, especially if it's a tear down redevelopment. You need to get a little bit further out, so that way we're looking at lots which had like early mid-century bungalows and stuff like that. So now we're starting to get into like, St. Clair-ish, Corso, those kind of neighborhoods. Yeah, Oakwood, where we've got a little bit more land to work with. Otherwise, the layouts they're too narrow, not deep enough, too expensive. Like there was always something in the A neighborhood which kind of kicked it out, especially on the west side. The east side, the lots are even narrower here on the east side, so it makes it even tougher. Which I think
beaches, though. I mean, you got some prime.
Yes.
I think.
What did you notice there?
Yeah, I think potentially.
I think in and around here could potentially work with some of these lots that are bigger. The flip side is if we get down to places like beaches, like land acquisition can be just incredibly expensive there. Just like a 35-foot lot in the beaches right now, just lot is $2 million, right? Right, like that's 35 by 100. We're looking at a lot right now. It's like, oh, that's killer. Like there are models that could work against that, but like if it's your first kick at the can to do a condominiumization project, do you want to put $2 million into land acquisition and then now build on top of that? It's
Actually, the other thing that occurred to me too is the area for opposition. So you mentioned beaches. I was
Yeah.
like, committee adjustments.
Yes, that's the other thing. Like, you'll get some counselors like, what's his name? Bradford. Like, he's a little more pro-development, but then you'll get some others who are just really anti-development. So that's the other thing. Like, what's that political microclimate like?
Yeah.
That are they going to be supportive of it? Because, well, you don't necessarily need a counselor who's like, yeah, go build these. You don't want one who's actively working against you, because then, like, it's a nightmare.
Yeah. Dan.
What do you find one of the biggest challenges? I know you said, there's a bunch of challenges, market, educating the market, all that. But in terms of like bureaucratic or legislative, what do you find one of the biggest challenges or caveats that you
Yeah.
see with this?
So, the biggest challenge, I think, you're almost certainly going to committee. So that in itself, right? You got the variances, minor variances in the committee process, which that's not exclusive to condos, but that's something you're going to have to face.
When you're going into that though, there's no reason to tell them.
Yeah. No, we don't even have to tell them we're a condo.
It's just a build.
Exactly. Yeah. You don't need to tell them, but that's certainly, as all of us that are looking at development with variances, that's impediment. And then number two is, I think it was the first question before I even really started talking about the just the variabilities and discretion of the planners. There is not, when you go on the website for Toronto and you look at the condo, it has all these steps and all these studies, wind study and shade study and traffic study and all that. It doesn't say you don't need that for the walk-up condos. You don't, right? But there's certain things, they still send it to all those departments. So what happens is when you submit the application for condo, it goes out to all those different departments and they have to come back and weigh in if there's conditions and such. So the impediment, if you will, is similar to a lot of, unfortunately, development in this regressive city, is the shifting winds and what planner you get and what condition do you get. So there's a lot of unknown. As developers, we want certainty, right? There's certain aspects that we know we're never going to get. We're not going to get a guaranteed price at the end. We're not going to get necessarily guaranteed construction costs. We can work those numbers. But what we don't like is this wide open variability. Now, is that going to stop the project? Absolutely not. You're going to be able to navigate through that. Right? But it's just a question of how much time, how much effort, and potentially how much cost. And that's where experience, I think, with the city, as much as any of us that are doing it, is really going to help. Because if there's a couple planners that have done this before, then if you get a different talk to this planner, he or she interpreted it that way. The good news is when we're talking about these small projects, there should not be a lot of conditions. There should not be a lot of requirements. Condominiumize it, because they do look at it completely separately. Building department and the zoning condominiumization. So the condo folks don't care about any of the building. If it gets past building, and permit, they're good. They don't care, right? And similarly, the permitting folks, they don't care if it's condo or if it's going to be purpose-built rentals or a single-family home. It just has to comply with the codes. So that's the good news, right? There's not a lot of discussion between the two, and there's not reliance and dependence. But you still have on the condo side, you're just going to have to, and if you go in with that attitude, realizing, okay, there's going to be some headwinds, but nothing that should stop the project or stall the project, a great deal.
Yeah, the variability, I think, can't be understated enough when it comes to development risk, right? Like, we've literally had the exact same, two different projects. One had what's called a convenience store, right? And this is a door that allows access to a unit through another unit. So it's a convenience store. And another project which didn't have it. We got different rulings on the same. We got the one that had the convenience store, they told us to take it out. And the one that didn't have the convenience store, they told us to put it in. So,
That's kind of thing, like,
We have a list of these planners, and we can just
Yeah.
fill it out.
as a lawyer, is there not something that a community can do to bring it to the city's attention, like get your shit together?
Well, I think that's the bigger issue, and that's what I'm kind of curious as to where's the advocacy group for folks like us? Because there's a lot of developers, there's a lot of landlords. Where's the advocacy group that's bringing these issues to the attention of council and to the media? Because what I found from the very first meeting with the planning department, it was obvious to me that their default is no, right? And it should be the exact opposite. Their default should be yes, because why? Because the city is under a crisis. This province is under a crisis. They've been mandated by the powers that be, approve and get missing middle, yet that's not their philosophy.
Stop it higher or something if they need to stop it.
Yeah.
Instant no down here.
Yeah, or just, okay, once again, the philosophy is if your default is no, then you're saying to the developer, no, you got to prove to me, why I should approve this, versus, once again, you're a professional developer, right? You're not going to bring something, and if you do bring something, and if you're being unscrupulous, then sure, weed it out, But the vast majority of us, right, are playing by the rules
Sorry, what
and
about
doing the right thing and relying on competent professionals. So the default should be yes, in my opinion. So to answer your question, we need advocacy.
Maybe we can chat at the end. We'll chat at the end.
There you go, you can start.
Well,
Oh, Gerard.
isn't there an Ontario renters group that's pretty large?
So there
but
are
what-
advocacy groups for developers,
Yeah.
but they're not really focused on this more smaller scale development. So the West End Builders Association, right, is one of them, and they're as builders associations go, and I hope to actually get the head of the West End Builders Association in here one day, even though we're not really West End, but to talk about advocacy, because they're, I think, doing a better job advocating for smaller developers. Here we've got Build, B-L-I-D, B-I-L-D, right? It's like a millennial came up with a name, but like they're actually supposed to be the advocacy group. But I do think that they're not really focused on the small stuff. They, I mean, you've got huge developers that are part of that advocacy group. I think the path for us in the small development space is to get those existing groups to start caring about us.
But it's an uphill battle, because even my wife, she works for the largest landlord in Canada, and they build, they develop these tower apartments. She has the same complaints, right? It's not just us, unfortunately. It's systemic in this region.
2-3 years ago, CMHC actually somehow found me and Matt, and they interviewed us on what were the challenges with bringing the missing middle to the market. And so we sat down with CMHC and we talked for 2 hours and just went through all the problems that we could see at the time. And now that we're deeper into this, we see even more challenges. But I do think that applying the same lens to large development as you do to small development, that's probably one of the biggest problems that we have, right?
You don't apply regular physics to quantum physics.
Are we the quantum or are we the regular?
We're the quantum.
Okay, all right. We're leading the charge. Gotcha.
But
Great.
I have a question. So with the agreement that the condo owner goes into with the four individuals, what is the process? Is there you said the condo people and then the building department. So is there a governing body for the condominiumization and regulations? And then this is a multi-part question. When does that process start? Do you wait until after construction? Are you waiting until it's substantial completion?
Right.
How long does it take?
Yeah.
How costly is that?
Yeah.
Just in terms of the big picture of the project.
Yeah, so the process is you, in a nutshell, you get approval by the city, right? That is an approved condominium, and then you have to register the condominium with land title, and then once that's registered, then you can get your PINs and sell the individual units. So what's that process look like? You should be applying for the condominium, submitting the condominium application concurrent with construction, because it does take, if you read the website, it should take about 3 or 4 months. In reality, it's going to take probably 6 to 9 months, and potentially longer. And what really extends it is depending on the conditions that they put on. As I said before, they don't necessarily talk condo approval and building department and permitting, but essentially they want to make sure, the condo folks, that what you said you were going to build in the condominium plan actually was built. So you can't get that done until you've completed construction or essentially submitted their conditions. So you start concurrently. You already obviously have, it's permitted, you got your set of plans, you can then start working on the submission. So there's a checklist and different submissions. Part of that's going to be the declaration, you get from the lawyer. You're going to have the survey. So you're going to work as a team putting that together, what the condominium is going to look like. So as we said, on the permitted plans, it doesn't say condominium, but you want to make sure when you've submitted the plans that you've already worked through this and determined how you want to design it, the configurations, what's the common space, what's the separate interest, and that's working with the surveyor and the lawyer. So you submit, you've got it permitted, you've kicked off construction, you're building it, you submit the application, the city responds within 30 days, they send out everything to the various departments, they come back, then they put conditions on, okay, you need to do this, you need to do that. That's why it's important as you're doing construction, because whatever conditions you want to make sure they're done during construction, because some of it may affect construction. Once you've satisfied those conditions, you've got your set of documents, then you don't have to do anything until it's completed, because then once it's completed and you get your certificate of occupancy or substantial completion, then you go back to the condo department and they say, okay, now we're going to confirm that what you said you were going to build was built, and if there's any then lingering issues, those are usually going to be administrative communication type stuff versus actually substantive stuff, because hopefully if you've complied with the conditions, then you don't have problems there. Then they'll come back and they'll give you the condominium approval. Then once again, it's you submit it for registration along with, there's like, I think 6 or 8 appendices, like your declaration and the survey and your budget and such. And that gets reviewed, and that's within 30 days. They're supposed to come back and approve it. Assuming there's no issues there, then you've got your registered condominium, and once again, then you go and get the pins. Now, I've heard of instances where people have sold, and I think Mortimer was one of them, where they sold units before the condominium was registered.
Yeah.
So I don't know if that was somehow some type of pre-sale. I haven't gotten into the weeds to figure that out, because quite frankly, that in my mind wouldn't be ideal, and I just haven't faced that yet. But there is a possibility you can sell before all of that process is done. But I think if I'm marketing a condominium, I want all that cleaned up and done. So if you start the process early enough, it should not be a problem, right? You can time it.
The pins were in place or not yet?
For Mortimer?
Yeah.
Well, if it wasn't a registered condo, I don't know what they sold.
Right?
Yeah. Yeah, it was on that particular property, the sale was all on builder paper. I didn't get the offer docs to review. I might have them somewhere actually. But yeah, I don't remember seeing pins set up yet. Yeah, because there's a whole bunch of regulations around pre-sales, right? Like amounts you're allowed to collect, how much of
Deposits, escrow accounts, and disclosures.
Exactly.
And
Yeah.
oh, one thing we didn't talk about on the legal side, so the lawyer's going to create the governing documents, the declaration, a set of bylaws, you're getting a corporation that's going to manage it. And then you've got a separate disclosure packet that under the Condo Act is required, because you're selling a condominium versus a single family home. Not a problem, not an issue, it's just one more expense. So, you asked about the expense. A really, really, really rough number on condominiumization, I'd say, is about $100,000 on a size project like this. You're looking at legal fees, you're looking at the city's condo fees, you're looking at survey fees, ballpark roughly $100,000.
And the city condo fees, are they based per unit, per square foot? Like,
There,
what do they
yeah,
base that?
well, there's an underlying fee, and then it's per unit as well. The per unit is a lesser amount. I don't, like 4,000 or 6,000. Don't hold me to that, but it's about 20 for a 3+1. It's about $22,000 or $24,000.
You guys have a condo board, and if so, how does that work?
Yes. So, I mentioned about the dispute resolution, but yeah, you set that up because once again, you're going to have a condo corporation that's going to run it. You just streamline it. You have an annual meeting once a year, and you get the budget. And if you design it the way that I recommend, or at least my projects, you're going to have minimal HOA fees, HOA dues, and maintenance dues, and so your budget's going to be simplified. We didn't talk about a reserve study. You should have a reserve study that's going to identify all of the larger, longer-term capital improvements like a roof and such. But once again, if most of that is going to be dependent on the unit owner as separate interest, then that's not going to be part of the association. So you don't have that as a reserve study. You don't have that in the budget.
I'm just thinking of it more compared to a tower with where you've got hundreds, thousands of people. I'm like, how does that compare? Like, you got 4 units, so is everyone on the board then?
Yeah, I mean, if you had 4 units, yeah, you would. But you'd also have, once again, you try to do like a tiebreaker. But if it's 4, you have an even number. You don't. That's where you have a dispute resolution. essentially you can have a basic mediation in the event of a deadlock. It goes to mediation. The community, free mediation service. So you're not spending hundreds or thousands of dollars with lawyers or mediators. Those tend to be the most effective means of dispute resolution. As far as the governance itself, hate to keep on beating the same dead horse, but if you've got fewer common elements and less money, there's really not a lot to manage.
Yeah.
You just have a basic, as I said, an annual meeting and just the limited expenses and responsibilities you get covered, and that's it.
So just to be clear, like you're making it sound like this is, it sounds like to me, like having to have a condo board for 4 units seems kind of like cumbersome and like,
Well,
but you're just saying it's like, it's really not a big deal, there's not a lot to it.
right. You're doing that because it's a corporation, so you've got corporate governance that you're complying with, right? So that's important from a liability standpoint too, right? And like insurance as well. So you want to make sure you're complying with the regulatory laws and for insurance as well.
I think it's more from like, if you go to a condo board meeting, where you go through condo meeting minutes, there's a ton of items for them to go through because there's just a lot of shared stuff.
Yep.
But in this kind of property, if you're not sharing the windows, you're not those aren't common elements. The roofs, each section is.
You don't have a boiler, you don't have an elevator, you don't
Yeah.
all that stuff. So the meeting is and the responsibilities are very streamlined.
But can you stipulate certain requirements, like if you replace your own windows, they have to still be black?
Yeah, exactly. That's what I was
so
saying.
you
You,
mentioned
yeah,
that earlier.
yeah.
So
You'd still want to put those covenants within the documents to stop that patch quilt or the owner that doesn't want to do it. And you can have some remedies. Ultimately, though, how strong are those documents? It's really going to depend on the owner, how much they want to push. But yeah, you have that in place. You have the remedies available, and it just depends on how people want to enforce it.
So just for one example, so let's say it's a flat roof and it needs to be replaced. Unit A is the front, facing the street. Unit B is the middle. Unit C is the backyard, facing the backyard. Can you divide it up in the agreements such as the front unit and the back unit that are equal square footage, pay slightly more because the middle unit is, let's say, smaller in area, so that they're paying 2/3, you know what I mean? Like they're
Absolutely, or you can just divide it, and the roof is actually split. So your condo actually goes from the basement all the way up through the roof.
So you'd just be responsible for replacing your own little section.
Yeah.
Like it's not just like divide by 3. It's like but my front unit.
Yeah,
is
think of it like a
bigger,
freehold
mine's
townhouse.
smaller, and-
Yeah, so you have the option of doing it either way. If you keep it as a common element, then absolutely you can do it by square footage. Or you can just do it so the roof is still separate interest. So you're just responsible for your part of the roof.
Yeah, like depends on how it's designed.
So
But
for the condo corp, is that, I guess you own that as you're developing and creating the condo?
Yeah.
And then when you sell each unit,
who owns
eventually you don't
more?
own the condo corp anymore?
Well, you don't take that back. You set up the condo corp at the time essentially that you're selling the units. So the condo corp doesn't own anything, even after you've sold to the owners. The owners, a condominium, you're owning an undivided interest in the condominium itself. So you would have, as a condominium owner, you would own your separate interest outright, and then you'd have an undivided interest, depending on like 1/3 or whatever it is, of the common elements, right? The corporation is there as governance. It's not there for ownership.
Who owns
No,
the
but
corporation?
that's what I'm asking.
Yeah, so the homeowners then become the members of the corporation. And then if it's 4 units or 3 units or 2 units, everyone should be on the board.
So yeah, I guess you, well, as a developer in the very beginning, you would own it because you haven't sold it yet. You haven't sold.
Well, I guess I'm having a problem with the word ownership. You would be the director of right of the corporation, but the corporation itself doesn't own anything. It governs. It has It's not really. I don't think it's our responsibility as developers to make sure that everyone gets along. We give them all the tools that we can, and then it's up to them.
Yeah, send out.
Yeah.
What are you doing with utilities? Like, I'm assuming you're kind of going furnace, whatever, for every single unit.
Once again, because you're selling to that single family homeowner mindset, I want to have control of my HVAC and water and electricity and as much as you can. Yep.
Any hurdles with the utility companies, like how they, they don't necessarily like to bring in 3 lines?
Yeah, I think that the hurdle there is just the same as anyone that's developing a 3 or 4-plex. It's really on voltage, 400 or what. Depends what you put in the units. Person I was speaking to the other day, they had a 4-plex. Oh no, they had a 5-plex. They wanted 5 separate water meters. It took them a year to get through that process. They had to go through the media and through their counselor, and then it got solved. So.
They got 5 water
Yep.
meters? I've never heard of that.
Yep.
If you want to split water, there's easier ways to do it, right? Like you can put in your own meters. You don't have to use city meters, and then have like
Sub-meters. Yeah.
sub-meters. People pay for them, right? Yeah. So there's ways around water. But to Dan's point, the most challenging of the utilities, I'd say right now, is electricity, right? And that's because for a long time you could do 4 units, 200 amp service, and there was no issue. Remember, a lot of the servicing here in Toronto is overhead, right? And the max that you can bring overhead is 200 amps. When you start to exceed that, you now have to bury the line. That can get really expensive depending how far you are from the transformer, right? So you could spend 20, 30K alone just to bury the line. So with the amount of electricity that they're now allocating to 4 units and above has grown. Most 4-unit conversions now, they're looking for 400 amp service, which means a buried line, because they're expecting EVs and
Well, they're moving
20
off of gas. Yeah, they're moving away from gas.
cell phone, 20 cell phones, I don't know, but they're expecting higher electricity usage now. So as a result, they're requiring more amperage to the house. But that's not just condominiumization. Any project you're doing now with more than 3 units, I say you should be very careful about needing 400 amp service.
So I'll be around if you have any specific questions. Also, the contact info is here. I'd love to hear from you if you have any questions, if you're thinking about this or anything tangentially. Would love to. We're a great community here with Volition. Really appreciate you guys supporting us as smaller developers, and yeah, it'd be great to see everyone out there.
Yeah, well, I want to give Dan a round of applause. Thank you very much for coming on stage with us today.
Yeah.
Just a couple of things for us to finish up here.
Thanks.
We always say, take action. We have a lot of folks who come to these meetups, learn stuff, and then don't do anything, unfortunately. Even if it is just getting yourself further educated, signing up for the next meetup, do something. It breaks my heart when sometimes I see people come meetup after meetup after meetup, and then like, oh, what have you been up to? Oh, nothing. So take some sort of action. That could be, hopefully, booking an advisory session with us. It is free. And that's walking people through what your real estate goals, you come to us with the goals, but walking through what that solution might look like, getting you from your planning stages to your goals, where's your starting point, and devising that sort of plan. Full disclosure, we're not going to do that in 30 minutes, but we're going to get at least some sort of idea, often give you some homework to go back to, get us some more information so we can design a full plan. We're regular agents too. It's actually 75% of our business now is just normal real estate stuff. I know it shocks people to hear that, but it is because people want a investor lens or investor approach to their normal real estate, right? They want to potentially do a basement suite, or maybe in the future they want to condominiumize, right? Like you can't just do that on any home. So oftentimes they're working with us on regular real estate. We take that same look, we do all the same financial planning, but you're going to live there, right? Also, this opens up to a lot more areas because we have people who are just looking to do, let's say, a duplex, but they do live up in Richmond Hill or wherever it happens to be. Our next meetup, I think, especially for this crowd, should be very interesting. We're actually doing a tour of a 4+1. So this is a project that's under construction. Please make sure you sign up. It's four in the front, 1 in the back, just like we've been talking about. Timing is different. It is Friday evening. It's probably going to be very dark by then. We were trying to make it a little bit earlier, but we couldn't get schedules lining up. So come out to that. If you're coming out to this, make sure you sign up through the meetup page because there's an extra waiver you need to sign because it is a live construction site. Don't come in your bring flashlights, bring emergency food, rations, right? Yeah. But yeah, it is a live construction site, so that's not the time to wear your fancy Louis Vuittons or whatever it is. This is like, I'm looking, like, you know, steel-toed shoes if you got them, or you know, sensible shoes otherwise. And yeah, so just make sure you're signing that. We'll have extra copies there if anybody forgets to sign ahead of time, but there will be an additional waiver there. But yeah, it'll be on a Friday. We almost never meet on a Friday, so just calling out for that for you guys. Hopefully I'll see you there. Should be very interesting. And we like to end here. Who can do it? We all believe you can do it. We all started with nothing, investing in nothing. You know, now we're building condos. So yeah, that's it. Thank you everybody for coming on the US election night, which is very exciting. Go home and see what happens to our friends in the South. But thanks very much. I'll be up here. Dan's over there. We've got the rest of the team around if you guys have any questions. Thank you.